All right, welcome everybody to the Self-Storage Investing Masterclass. I will be your host for this evening, and just want to take a moment to make sure that you guys have pens and papers to take notes. Scott shares his years of wisdom, his years of experience investing in self-storage. So Scott and his affiliated companies focus on the acquisition, development, and syndication of self-storage facilities nationwide. He currently owns and operates over 4 million square feet and over 25,000 units of self-storage throughout the country. His education organization, self-storageinvesting.com, provides courses, tools, live events, and mentoring to help others launch their self-storage business to enjoy a lifestyle, as he has coined, free from tenants, toilets, and trash. His various companies fund and build 4 to 6 houses each year in Mexico by taking his family, staff, and clients on an all-expense paid short-term mission trip. So with that, I will turn it over to Scott. And Scott, if you're on.
I am here, Kurt. Thanks so much. And welcome, everyone. Excited about this evening. So what we're going to be talking about indeed is this incredible world of self-storage, which we love. And I would say also welcome to the party because we're celebrating. We don't always celebrate a recession or a downturn in the economy or a pandemic. However, in the self-storage business, we actually benefit from the trauma and transition that's happening out there in the world. And so that is an opportunity for us to be able to shine and to be able to welcome folks into our facilities and to be able to help them and to be able to serve them. And you've probably seen, you've probably read, you probably heard that self-storage is a recession proof. And although I would never say it is a recession proof business, because none is, self-storage actually thrives during a recession, and we are extremely recession resistant. As a matter of fact, one of the most profitable sectors in the economy anytime we head into a downturn. So with that, all eyeballs are on self-storage now as we head into this new economy, if you will. Interest rates are rising. Values of other forms of real estate are dropping, but the self-storage freight train keeps rolling down the tracks, which again is probably the likely reason why you're all here. You've been looking around at the landscape. Maybe you've been in real estate in other forms, other asset classes, and you're seeing the same stats that some of which we're going to share tonight, but the hundreds of other statistics that all point to the fact that self-storage is the top performing asset class in commercial real estate. I'm not biased by any stretch. As a matter of fact, if you look at self-storage, it's not really a very sexy or attractive asset class. I mean, these are garages. They're metal boxes on concrete slabs. But what attracted me away from very nice office buildings and very nice Class A multifamily that I was investing in, high-end single-family houses, cold storage, industrial buildings that I was investing in before, was the fact that self-storage is very recession resistant, it is inflation resistant, and it has a low expense ratio. And when somebody doesn't pay you, you simply lock them out and you sell their stuff off to recoup your money. That is what, drew me to self-storage and came to the logical conclusion that, you know what, this is the asset class that I need to be, and it was because of the statistics, all about the numbers of self-storage, and that is why I am in this asset class and still in it. And as Kurt mentioned, we've been at this for a little while. I've been investing in self-storage for a number of years, and although some people that have had the amount of success that our team has had and the amount of facilities that we have and the doors that we manage, most folks and at, I guess, the age that I'm at, people will be taking their victory lap. But we're just getting fired up. Our team is firing on all cylinders right now. And as we head into this next downturn, we know that more millionaires are created during a depression and a recession than any other time in our nation's history. That happens over and over and over again. And so as we head into this, we know because of the nature of the recession and the fact that we have the skill set. This is our third recession. We can see a little further down the road than most folks. We know what's coming. We've been preparing for it. And so we are excited and we are jazzed, and we aren't by any chance slowing down. None of us are in rocking chairs yet. As a matter of fact, we're more than fired up about this recession as we head into it, because again, we've been preparing for it. We've been attracting private equity. We have been forging those lender relationships. And so while other folks are not getting the loans or not being able to raise private equity, we are poised and ready to pounce. So the opportunities are coming down the pike right now. There are troubled assets. There are troubled partnerships. There are troubled notes. And we have been the benefactor of some of those. And we know that heading into this next quarter, and as well as the balance of this year, is going to be an absolute treasure trove of opportunities that will be flooding the marketplace for those that have the knowledge, that are prepared for it and know what to look for, know how to underwrite these things and spot a deal from an opportunity, and then also have the ability to execute and transact, which means having the capital in order to do so. So that's what we're going to be sharing this evening. And as the room, it looks like, is filled up, I don't see any more new folks that are coming on, but the stragglers, well, they'll just have to catch up because we got a lot of information that we're going to cover. And I am excited about the industry, and whether I'm excited or not, I'm a fast talker. So the team is constantly sending me notes, and will remind me to slow down. And so we've got a lot of information that we are going to share that I want to get across to you this evening. And I promise my team will stick around. I will have to exit at the end of our presentation. And so that'll be about 3 hours from now. Just kidding. We're going for about an hour. So the goal here is to end it in an hour. And we may go over a little bit. But my team will be here to answer the questions as I have another meeting that I need to run to, believe it or not, after this. So with that, we are going to launch and talk about how to create recession-proof cash flow in real estate without all the hassles of tenants and toilets and trash, because that is the time that we're heading into right now. So let's jump into my background just briefly. So when I began in storage, it was not without going through a few trials and tribulations. From 1993 to 2005, we bought and sold 82 single-family rentals and 423 apartment units. From 2005 to 2022, we bought, converted, and developed 16,000 units and over 2.6 million square feet of self-storage. And then we exploded in the past year and a half and gone over to 25,000 units and 4 million square feet. We've raised over $60 million from over 450 private equity partners. I speak for the Inside Self-Storage trade shows, as well as the Self-Storage Association. We write for Forbes magazine, and we also have the #1 self-storage podcast called the Self-Storage Podcast. In 2007, we founded a national self-storage education and coaching business as well, which you are seeing, this is what you are seeing right now, which is the benefit of that. And what we do is we teach people how to go out, find, evaluate, purchase, and manage self-storage facilities, like Adrian Brumar out of Lansing, Illinois. He began working with us, came through our Self-Storage Academy, got into our mentoring program, bought his first facility, and his very first small little facility was throwing off $89,000 in cash flow. And then he sold it for $1.3 million profit, which allowed him to move to Orlando, which is what he always wanted to do, moving out of the Chicago, Illinois winters. And that's what we do, is we allow folks to, achieve some of their dreams and certainly their goals or their bucket lists. So whatever that looks like for you, we are ready to teach you and show you how to go out and take advantage of the opportunities that exist, not only in self-storage, but also in the market right now. So this masterclass and this case study is brought to you by selfstorageinvesting.com and our virtual academy. And we have a virtual academy that is coming up April the 24th, the 26th, and the 27th from 5:30 to 9:30 on those dates, the 24th, the 26th, and the 27th. If you click on the button right there, you can register your seat for that event. It's coming live in just 2 weeks, where we bring the Self-Storage Academy to you. We've been teaching people how to invest in self-storage, again, for the past 16 years. And we've been doing it live, and we still do live events, but the best way to be able to teach more people and to reach them, and also on a budget, because you don't have to travel, is by bringing the Academy to all the sessions, all the information, all the case studies, all the data, and our entire team will be on this live streamed event. So you do not want to miss it. So we have been, what we teach is what we do day in and day out, which is our best business practices, following our best business practices that have been honed over 30 years in real estate and over 18 in self-storage. And again, we've been through 2 recessions and all the lessons that have been learned throughout the years, including the recessions, which again allows us to look a little further down the road. We're ready. We're poised for this one. We saw how the big folks, the Public Storages of the world, the Extra Spaces, the Life Storage, CubeSmart, what those folks did in 2008, 2009, we did very well as an organization as well during that time frame, buying up, snatching up facilities. But this time around, I realized those that have more money and have access to it are the ones that are going to be able to win in the biggest land grab that we have ever seen in certainly my lifetime in self-storage. And that is occurring right now. So when I say welcome to the party, I mean welcome to the party. It is time to go. And we are sharing not only our secrets, because, well, they're really not secrets any longer. The goal is for us to go out and teach and elevate the community of folks that are looking to invest in self-storage. So we all have an ability to participate in this together and doing it the right way. So the reason why we do this, since the beginning, when my wife Christina and I started this business, when we got into real estate to begin with, it was so that we could raise our kids and be able to travel around the world, not only for vacation purposes, but mainly to be on the mission field and to have our own schedule, to go wherever we wanted, whenever we wanted, and not have to worry about anything else because in real estate with the tenant and toilet side of the business in our apartments, we weren't able to do that. We didn't have the free cash flow. We didn't have the free time, certainly. And it wasn't until we got into self-storage in one of the most profitable sectors of commercial real estate that gave us the time, the freedom, the resources to be able to do so. And as a result of that, we also recognized in the very beginning that our mission is also to give back. And since the very beginning, we have been mission focused and been contributing to many, many charities and many other sources that now really pared that back and really focus on one primarily, and that is taking people onto short-term, 4-day, family-friendly mission trips and building houses in Mexico and the Dominican Republic, but really now doubling down in Mexico. And we pay for the whole thing for anybody who wants to go on a mission trip with us. We pay for the whole trip. All you need to do is get to San Diego. And it has been incredible over the years. Now we built 26 houses. We go on 2 trips per year. We build 3 to 4 houses each time. We take about 80 people each and every time we go. And again, we pay for the houses. We pay for the whole trip to open up this mission experience to folks so that they can only see what it's like to change and end generational poverty one family at a time. But most of these folks are touched in some way. And they come back to their communities, they come back to their, sometimes just their families, and they begin doing mission work and paying it forward and making a bigger difference with the ripple effect of just being open up to going on a mission trip and to seeing what it's like to have an open hand and to be able to serve and to give back. And so this is what we do. This is why we exist. And the reason that this is what keeps us going. So could we quit? Could we take a victory lap? Certainly we could. But we've got a greater vision in mind. We have a greater purpose in mind. And this business has been a gift to us, and we are utilizing it to be his hands and feet and to be able to give back and to be able to change the lives of, again, these communities, but also the people that go on these trips with us. And so I hope that some of you would have the opportunity to go on one of these trips because it's life-changing for some, not everybody. It's certainly life-changing for the family, and to be able to participate and take part and to witness that is incredible. And for those of you that have kiddos and you're looking to start or create or leave an impact and legacy and build that in your family, man, I can't think of a better way of doing it than this. So, all right, let's talk about how we got to where we are. And we're going to go through a little history lesson to help you appreciate where we are. Don't worry, it's going to be short for those of you that don't like history, but history repeats itself, and there's a lot of lessons that come out of history, which is why we dig into it, especially business history. So, number one, the first recession that we went through, the first recession that I went through was the .com/.bomb recession, March 2001 to November of 2001. Pretty short-lived, 8 months. Our GDP decline was around 0.3%, and we had 5.5% unemployment. The cause of that was the collapse of the .com bubble. All the valuations of these companies drug Wall Street down, and it was a tech and specifically a Wall Street bubble, and it was a Wall Street recession. Fed raised the funds rate from 4.75 to 6.5% from 1999 to 2000, making it even more difficult and slowing the economy. Then came the September 11 attacks, which sent the economy then into a tailspin. Everybody was scared, and when consumers are scared, they pull back, they hold on to their capital, their investment dollars, and the stock market goes down, and we head into a recession. So then the federal government, after the hikes and in order to get the economy rolling again, rolled out the Community Reinvestment Act, which created lax lending, which meant that basically anybody that could fog a mirror would walk into a bank and get a loan for a house. And so what happened for us and to us is that our tenants, those that could fog a mirror, well, they bought a house, and who could blame them? It was the best time in our nation's history for anybody to buy a house. So they did, and that left us with a high vacancy. And that left us in a very precarious situation where we had to rehab the properties once we bought them, distressed properties, to rent them out. And then we had to rehab them again in a higher fashion, better fashion, to be able to then sell them off. And then it happened one day after 3 years of struggling through this. What we call the grocery store incident, which we don't like to talk about around our house much anymore. And that was a time when we were at the grocery store with our 2 young kiddos and our debit card didn't go through. And it's game over. We're darn close to it when your debit card doesn't go through, because that's tied directly to the bank account. But it was at that time when then we began to look into self-storage, and it was my wife's idea to say, hey, what about self-storage? This was the second time she'd mentioned this, because the first time we had talked with some folks that were in our real estate group that I used to be the president of here in Indianapolis. And they talked about how they were absolutely loving the self-storage business, and without basically all the hassles of tenants and toilets and trash, and how it was recession-proof and inflation-proof and on. And then when I dug in, I decided, okay, I need to take a deeper dive into this. And once I did, over several months, I loved what I saw. So I found a mentor. I got to work. We sold off all our houses and apartments from 2002 to 2005. And quite honestly, self-storage found me. I didn't find self-storage. And it's a matter of self-awareness. And here's maybe point number one, if you haven't taken any notes yet. And this is the greatest gift you can give yourself. It's the greatest gift you can give your kids, for those of you that are parents. And that is to know what your strong suits are, what your blind spots are, and not necessarily working on what you struggle with, or, all of us have giftings, and all of us have shortcomings, and to try to be the most well-rounded individual. Certainly we can get better at things, but if there's things you hate to do in your business, if you're just not cut out for it, then don't go into that line of work, or you can hire somebody to do it. And I am just not cut out to run a large organization. I'm not good at the staffing side. I lead more by example, but I'm not, I would say, a great leader. And so, to be able to get into a real estate business that doesn't require a lot of manpower and a lot of hand-holding, and it's a simple, predictable business model, yeah, that's all for me, because I have a lot of ambition, and I'll outwork anybody. I went to a very strong business school, got very good grades. I understand business. I understand entrepreneurialism, but growing anything really large that was very intricate, I realized that was just not for me. And so what better industry for somebody who has a lot of blind spots and understands that you're not going to do anything in the tech sector, certainly not going to be a doctor or an attorney, but I had ambitions and aspirations to go out and change the world with our mission work and what we were going to do. And I found it in self-storage, which is ironic, because many of the folks that we've helped to become successful in self-storage quit their doctor business, quit their lawyer business, and their other practices that we always look at in this country as being so, at the upper echelon of the income level. And we're creating millionaires out of doctors and lawyers that weren't millionaires before they started working with us. And we're doing it with this simple, predictable business model of fully automated and touchless self-storage facilities. Go figure. Metal boxes on concrete slabs run by machines. It's absolutely incredible. We have don't get me wrong, I love people, and I love to do that, to lead people and to be able to teach them. And that is great to grow folks that are under our purview. But boy, if we can run a business that we don't have to have the hassles of the folks that don't work out, that we don't really care for, that don't care for working for us, and we can automate this and put in fewer moving parts, if you will, then we're going to do it. It reduces our payroll as well. So we have set up our business to be able to run with the fewest amount of personal capital as possible. So we have responsive websites that respond to when somebody is looking for storage to whatever device that they're using, whether it's on their desktop, whether it's on their laptop, their mobile phone, their iPad, whatever that looks like. They have the ability to be able to rent a unit. And if they come into our facilities, many of our facilities do have staff, but we also have a part-time kiosk. So if there's a person working with the staff member, they can go over to the kiosk. We also have many facilities that are unmanned. And so if you do need help or assistance, well, then you click on the screen here and it automatically connects to our call center, and you can talk to somebody. But you go through the process, and it's no more advanced than going into McDonald's these days, where you order at the kiosk, or what we've been doing for years at the grocery store and checking out, and at the gas station or at the pump, or quite honestly, ordering a coffee with your coffee store app on your mobile phone. This isn't that difficult of a transaction. It's a very low labor intensive type transaction that can be handled with technology. Same goes for if somebody doesn't move on their own. and we have to assist them in moving, or if they leave and we have to remove some of their stuff, well, we do it by way of going online. We take our lock off after they've been overlocked. We cut their lock off, we open it up, take a picture of the unit, close it back again, secure it, and then we put the contents of that unit online and sell it off. And then the next person that comes along that that buys it, well, they have to clean the whole thing out, lock, stock, and barrel, in order to get their deposit back. And then what we're left with is a unit that is cleaned out, ready to go for the next person waiting in line. And we have sold the contents of that stuff that was sold the contents of that unit, rather than getting stuck with a whole bunch of stuff that we don't want. So for my landlords out there, how would you like the ability to lock out your tenants for non-payment of rent, advertise in the newspaper publicly, basically shaming them by name, because it's legal, we have to, by the lien law, state their name and the unit number in our facility. So that gives them the opportunity to come down and pay. So all the friends and family can see that they're not paying us. And then if they don't pay and they don't come back in within 90 days, we get to sell their stuff off and recoup our money, our back rent and our late fees. That's a beautiful thing in self-storage, but it's only in self-storage under the lien laws, because that does not exist in habitational real estate. You cannot do that. Don't attempt to do that, because it is illegal. Just making sure that I state that, and this is being recorded, but that only works in self-storage. And quite honestly, folks, that is probably the primary reason why we left the tenant and toilet business, because the best recipe, or the best cook in the world, can't fix a broken recipe. When somebody can get away and basically steal from you, and the courts call it non-payment of rent, and then they destroy the property on the way out, and the courts call that excessive wear and tear. I call it vandalism and theft. But when the courts are against the big bad landlords in most of the states, I decided enough's enough. I'm out. I'm not contributing. I have my own charity, and that's houses, not not our tenants. All right, so that leads us to number 2 in terms of the second recession that we've been through, the great one. What's so great about it? Well, just the magnitude of it. That's all. December 2007 to June of 2009. This one was a little bit longer. So what caused this? Yeah, the Community Reinvestment Act. Remember that from a couple slides ago, 7.5 minutes ago? Those bad loans for my tenants who could fog a mirror. Well, guess what? Surprise, surprise. What a shocker. They all defaulted. And on top of that, our GDP declined by 0.3% again, and unemployment this time skyrocketed, double the amount. It was 5.5% back in the recession of 99-2000. It skyrocketed to 10% this time. While self-storage flourished, because we're in the trauma and transition business. When people are downsizing, when businesses are downsizing, then people put their extra stuff in storage until they get their feet back under them again to be able to move out, or until their business gets back rolling again. And then they move their inventory back into a larger space, back into their old space that they were subleasing in the meantime. And it causes strains everywhere. Partnerships were strained, and people were getting out of business. They were getting out of self-storage facilities. It did cause divorces. Divorces cause a demand for storage. And so, all the D's, divorce, death, dislocation, all the things that go into creating the demand for self-storage occur during a recession. And so self-storage benefits from that. It is needs-based. And so during that time, we bought, developed, and converted everything we could get our hands on. And we laid the groundwork for the next recession. And the lesson that we got out of that one was, thank God I got into it several years ago. But the bigger lesson was, all right, a recession occurs basically every 7 to 10 years, like clockwork, since the beginning of time, literally. And so we're preparing for the next one, and that's what we've been doing. And so here we are. It's our Super Bowl, folks. Game on. So the 10 reasons why I love self-storage, and the reasons why we are so bullish as we head into this next step, is because 80% of those facilities out there that are troubled, that are going to be coming out into the market, 80% of those are owned by mom and pops. They didn't build value in these facilities when they bought them maybe years ago. Now they have to refinance them at today's interest rates, which are double where perhaps they bought them at. They were buying it at 3.5% or 4% interest rate. Now it's up to 8%. And the loan to value that they had back when they bought it was 80, 90%. And now the banks are only refinancing at 65%. Well, if they haven't created enough value when it comes time to refinance, they may not have the valuation. They may have to come to the closing table with money. And if they can't do that to save their property, then they may be coming to the closing table with the keys to the facility, in which case we're going to be poised and ready to assist if we can, form a joint venture, a partnership, or just flat out buy the property from them or from the bank. We see nothing but high demand and fast growth. As a matter of fact, this is the sector of commercial real estate that has been growing the fastest. Over the past 10 years, the amount of self-storage square footage that has been built in this country has outpaced all other forms of real estate. And that's because there's demand for it. We're still not full. We're still not full across this country because it is in such demand, and that demand will increase as we head into this recession. It's the easiest to fund. Lenders love self-storage. The Small Business Association loves it. And so does private equity because, well, it does better than all other asset classes during a downturn. And therefore, self-storage has the lowest loan default rate. It has the lowest loan loss rate of all commercial real estate. So guess which asset class lenders want to have on their balance sheet and on their books? Well, it is self-storage. And that is also attributed to the fact that it has the highest cash flow per square foot. The smaller the unit, the higher the amount per square foot in self-storage, which is the polar opposite of all other forms of real estate. So more units that we can cram into a site, the higher amount of cash flow and rent that we can garner per square foot. It's the easiest to manage of all asset classes because we can put a kiosk in place, and we have call centers that manage these for us. Low labor intensive transaction. In many cases, our apps will rent the unit for us. We can also add many passive income streams to these facilities by way of adding U-Haul trucks rental and adding retail sales of locks, boxes, and moving supplies, adding tenant insurance, adding temperature controlled storage. There's a number of different ancillary income streams and profit centers that we can add to a self-storage facility: medical records and storage, furs, wine, art, other collectibles, small businesses, offices, you name it. We can add these additional profit centers and spaces within our self-storage facilities that do nothing but to add on to the initial rent, but then also on an ongoing basis. And of course, rounding out my top 10, no tenants, no toilets, no trash. Again, coming from those other forms of real estate. Those are, everybody, the old adage you've heard is, everybody loves rental real estate for the tenants and the toilets, and that's it. Well, we don't have that here. And so that allows anyone, but including myself, for me to be able to focus on growing the business. I get to come into work every day and work on my business rather than work in my business because I don't have to deal with tenants and toilets. And again, number 10, recession and inflation resistant, which is most important as we head in. So we're going to do a case study. So over the years, as Kurt mentioned, we're up to 25,000 units plus and growing. We do conversions of industrial buildings and old strip centers and big box retail. I think we do this better than just about anybody else across the country. We love that model. We develop from the ground up, but the bread and butter, what we've been doing since the beginning, is buying these Class C, B-, single story self-storage facilities, turning them around, adding value to them, leasing them up, building more buildings, and just by operating them better with our best business practices, creating more value in them in the shortest amount of time, and then layering our really great private equity partners capital on top of our really great lender capital, which we have the ability to get to very good rates and very good terms because we've been at this for a while and we've got a track record of success. And so we formed a fund, a $25 million fund last year. We're getting ready to start a $50 million fund. We still do direct investments, meaning a portfolio of 3 to 5 facilities or single investments, single developments, or a single self-storage facility. Nothing has changed. We're all about value add, but our bread and butter has been buying these value add single story, single asset self-storage facilities, creating value, and then turning them around and selling them or refinancing them. And so that's a case study that we're going to focus on right now. This is one of the best examples, and I've shared this one other time, and it was just so good that we needed to share it again. And this is just one of it's the most recent exit that we've had on a facility. And it represents pretty much everything in terms of a case study that we could want or hope to see in terms of finding, evaluating, purchasing, and managing a self-storage facility, and what a successful case study is supposed to look like in a facility that just about everybody on this call would look to buy. It is attainable for anyone. So we're going to drill down on the facts that this is a very recession-resistant investment. And so this was part of these slides are straight out of our capital raise. And so a lot of this has been tweaked, but much of this is from our capital raise, which is what we shared with our investors behind closed doors and a VIP invitation only webinar. So these are the benefits of this facility as they were laid out to our investors, and for anybody that's looking to invest in a facility like this as to what to look for. Obviously, we just mentioned that self-storage is very recession resistant. The ability to have the price allocated in terms of the depreciation to those who want to invest outside of their retirement fund so that they can get the full depreciation. There's a whole lot of folks that are making money these days, and maybe some of those folks are here on this call, and you're looking to 1031 into another project, or you're looking to invest capital, liquid capital, but you want that depreciation, you want the write-off to roll down your taxes. And that's what this, one of the benefits of self-storage and investing in this project and self-storage in general allows you to do. We've been able to, in our cost segregation studies and our engineering, get this, folks, we've been able to write off as much as 80% in the first year of the facility in terms of losses, in terms of depreciation. We have the best consultants in the industry, but we've also got a few tricks up our sleeve that we, clearly share and teach at our self-storage academies that puts us in a position to be able to appeal those taxes and lower them and get up to 80% written off within a year. And again, not me, not even necessarily our team, but our vendors and our third-party folks are some of the smartest and the brightest in the country, and they have showed us, and we continue to use them over and over again, the ways that we can mitigate our taxes better than just about anybody else out there. And then we add the value to these facilities once we get them under our belt. And that is by way of adding U-Haul, if it makes sense to do so, by increasing the below market rent, by increasing and adding these other income streams, upgrading the technology, sometimes by reducing the payroll along with that, and then just overall management efficiencies. We are able to run these facilities at a lower expense ratio than most of our competitors out there, which again puts us at a competitive advantage and also makes us more profit for our investors and ourselves. This facility is located in a very high job and a population growth market, which is always good for leasing up and then for driving rates. So this facility, located in Clarksville, Tennessee, which is a suburb of Nashville, the greater Nashville market. In terms of the aerial map, you see the facility there in red on Tiny Town Road, and you see all the residential all around it. But you only see one more self-storage facility, smaller than ours, feeding this entire market. And so, yeah, we're pretty fired up about this project. $5,225,000 was the purchase price. Years built. And again, one of the beauties of self-storage is you can phase these things in. You don't have to build the whole thing like an office building and pray that you fill it up before you run out of money, your investment reserves, your lease up reserves. You build a building and you fill it up, and then you build another one, fill it up, and then you build another one. Total rentable square footage, 68,497. So large enough to be able to manage it very efficiently, having the resources, but then also, more importantly, is attractive to a buyer who's a little larger coming along and buying this from us turnkey at the end of our value creation phase. It's on 6.3 acres, which we also like. We'd like to see anything that's above 5 acres. That's always a bonus. In the Clarksville, Montgomery County MSA, 695 units and 30 parking spaces on site as well. Very stable population and employment in an undersupplied market at only 7.28 square foot per person, which our feasibility study showed, our market study showed that there was an excess demand, meaning there was a demand for an additional 157,095 square feet within a 3-mile radius of this facility that wasn't being met. So high occupancy, high rental rates, annual growth rate in the market, 1.5%, which is, believe it or not, doesn't sound like much, but believe it or not, that's very strong. Average household income at 61,000. We like to see it 45,000 and above. Certainly there. Population of 94,000. We like to see it over 80,000 in our trade area. So clearly above that. Average home value of 161,000. A good strong number all the way around. And most importantly, room to be able to push those rates. So here's our value add strategy for this facility. Creation and leasing of RV, boat, and vehicular storage on site, which they weren't utilizing on the vacant ground. Increase the U-Haul truck rentals. Increase the very mediocre merchandise sales. Mediocre is being very polite. And then the 6-month list of renovations was to pressure wash exterior of the paint parts of the storage buildings, barbed wire installation on all fence lines, electric gate controller, and keypad. They had an old style pad that was a manual. That wasn't a pad at all. It was a manual. A landscaping overhaul, trim back all the fence lines and undercut trees just to give it a better curb appeal. Insulation, new trees, bushes, and a whole lot more landscaping all along the front of the property. Reseal and restripe the asphalt in front of the property, and install a new awning for the front of the office just to give it a little more professional look. So we do put a lot of place a lot of value in curb appeal at the front of our facilities and throughout. When people are looking to rent somewhere, it needs to be safe. It needs to be clean. It needs to be secure, and it needs to be in line with the market and close to where they live. And whoever answers the phone and has those two offers is generally going to win. This is a commodity, folks. They're not looking at school systems or neighbors. It needs to be close. It needs to be clean. It needs to be secure, well taken care of, and competitive in terms of the rental rates. So we're going to upgrade the signage. One, because it fell over, and two, because the lights didn't work even before it fell over. And we had the ability to generate a larger one out on the site, and then also expand on the U-Haul and add additional signage where there wasn't any. There's the existing manual gate entry that was opened manually in the morning when the office opened up. No need for that, clearly. So that was one of the first improvements, and we were going with what they call a high-low Bluetooth keypad, so that anybody can come in, especially RV units, since we have all the parking, and we're going to be adding some. So the high-low, as you can imagine, high for the folks that are sitting up high in an RV, or commercial vehicle, low for the folks that are driving through in a car or standard vehicle. Speaking of high-low, we have a very high car count. We'd like to see 10,000 cars per day going in front of our facilities. This one had 28,000 vehicles per day. So even though most folks, when they're looking for storage, it is demand-based. They're looking on their phone, they're looking on a laptop as to where the self-storage is close to them when they need it. However, the familiarity, having driven past it in the past, when they look it up, they're just like, oh, I remember that one. I remember the name. I know exactly where it's at. And they remember driving by it, believe it or not, and perhaps that it was a nice, clean facility, because hopefully it was. So this was a nice facility. Gravel's a little bit tired, need to be done again. We got some weeds, issues around here. And again, as we mentioned, pressure wash, paint, cleaned up. So it was very, very well maintained. It was just tired. It was just tired is all. There's the office, pretty plain. We're going to put an awning over it and light it up. Anytime we have a building, that has a flat face like this, if it's really flat, that's vinyl siding, like concrete or anything else. And we're painting it, we're putting signage up on it, or we're putting banners on it. In this case, we're putting a banner up on this one right now. That's just a billboard waiting to happen. I don't know why folks don't ever utilize that, but they didn't. So cleaning up the fence line, as we mentioned, cleaning up the gravel, it still needs, even if we're going to make it look nice from a curb appeal standpoint from the road, they can't be disappointed when they come back in the facility. We're also minor things without getting into a lot of detail. You're seeing the lights over here. Those are halogen bulbs. And when those things are on at night, the meter spins, and the electric company loves us for it. So those will all be replaced with wall packs going on the building that are LED. So as we move along, again, very, very traditional single story, one level, class A, B, or C type facility. Folks, what would you say? We'll give it a C plus. How's that? But it's got some room for improvement. But that's exactly what we do. This is our business model. It has been from the beginning. Buy these Class C facilities, turn them around to a B. You'll never turn it into a Class A because of the market and the size and the amenities and just the age of it. And we'll turn it into a solid B plus, raise the rents, lower the expenses. And that's how we've created our millions. And that's how what we've done is shared that business model, and our best business practices to help others be able to create millions in self-storage and go off and do whatever it is that they want to do as well. And it all starts right here. Like I said, self-storage is not a sexy business, as you can see right here. But what is sexy about this, folks, is the cash flow. And it's a simple, predictable business model that if you follow the process that we teach you, and we teach this and do this better than anybody else out there, we'll get you into the business at the best time right now ever to invest in self-storage. I love it. Okay, so our financial projections on this project. Purchase price, that was not a projection. That was the actual purchase price. Projected holding period was 5 years. And this is, as we were raising private equity on this is what we're sharing with our investors. Total acquisition costs of $5,960,000. That's with fees, loan fees, acquisition fees, broker fees, everything else built into it. Total debt we're taking out on this property, $3,785,000. Equity, the capital that we were raising to put into the project, including our own capital, because we always have money into our own deals, $2,175,000. And the 5-year projected sales price based upon our market study, not us selling it or projecting or any pie in the sky numbers, but this is based upon our consultants and their independent study stating 5 years. If you do these things, if you do what you've done in the past at your facility, you should be able to sell it for $7.5 million. And our exit cap rate that he put on that, not ours, the exit cap rate that he put on it was 6.75%. That was taking into account that we will have an increase in interest rates at the time that we were going to sell it. Here's the loan terms. 18 months, interest rate 7.5%. The LTV was 60.96%. Now that we do, we keep everything that's in our portfolio at 65% LTV and lower. So does that mean that we spend a little bit more in bringing our private equity in because they're more expensive than a bank or our lenders? Yes, it does. But also that buys us a little lower rate, even though 7.5 doesn't sound low. It's a pretty decent rate for this investment property to be able to hold for this amount of time. Especially as we've done a number of these in the past. Loan amount ended up being $3,185,000. The interest only period was 18 months. The monthly payment interest only $19,906. And so we were fine with the 7.50%. And it was also allowed us to close quickly, which we had to do on this facility. So total acquisition sources $5,960,000, and that will be refinanced. That was the goal, is to refinance that. That's why we have an 18-month interest only. That gave us 18 months to be able to turn the value of this facility, turn up the wick, and create more value in this facility. So our loan assumption in terms of the seller note, we did carry back a seller note on this project, 24 months, 2 years, at 6%, loan to cost 11.48%. Loan amount $600,000 for 24 months, and the interest only payment was $3,000, and no collateralization because they were in a second position. So this was a bridge loan that was carried by the seller for an additional $600,000, allowed them to not have to pay capital gains, help us to get across the finish line and not have to raise as much private equity. So without going into every line, because I said that we were going to be done in an hour, I've shown you, here's what we need to focus on, which is right here, which is the net operating income, which is your income minus your expenses, giving you your net income at $509,590. That was created. Those projections were created by the market study and our independent consultant. And so year 5 NOI, 509,590 at 90% occupancy, selling at a 6.75% interest rate. Cap rate would give us the valuation that we were looking for. Now, because the market was so strong and it remains strong in terms of the demand and the interest in the self-storage, we sold it as part of a portfolio. So we packaged together 2 other facilities that we sold. So we secured the broker opinion of values, kind of like a reverse appraisal. I said, if I'm going to take this to market, here is what I'm going to place as a valuation on this facility. So we liked what we saw. We signed the listing agreements with Marcus and Millichap on 2/8 of 2022. Initial marketing started at 2/22 of 2022. List price of $20,800,000, and that meant for this facility was $9,152,000. All right. So remember, we were planning to sell it before. If not, I will remind you it was $7 million, a little over $7 million, and we'll show you what the difference is on that. 22% of that $20,800,000 represented the Duncan facility. 33%, Clarksville. 22% went to our Duncan facility and 33% to Punta Gorda. And it did outperform not only this facility but the entire portfolio. So our highest and best LOI received was on 4/6 of 2022. We signed the purchase and sale agreement later that month. End of due diligence was in June of that month. Closing date also at the end of June. Our projected sales price was $7,549,000. Our actual sales price was $9,152,000. And then there was some ongoing reconciliation for bills, loans, after taxes, transfer taxes that amounted to basically nothing in terms of a return to our investors. So here's where we ended up. Here's how we shook out. Timeline projected 5 years, actual 1.5 years. Total equity raised $2,175,000. Total project cost at $5,960,000. Our equity multiple that we had advertised it to our investors was 1.92. We returned to 1.79. Preferred return was 8% to them, and the internal rate of return Projected was 20%. Our actual internal rate of return to our investors was 48, almost a 49% internal rate of return. And the project internal rate of return was even higher than what we gave back to our investors. So were they happy with us? You bet. You bet. And so, folks, this is what this looks like. That was a very simple business model deployed on a very simple project in a short amount of time to be able to achieve those returns. And the opportunities are still out there. We've got, we're rounding out our $25 million fund as we speak. We got 3 more facilities that we're buying in Kansas City, and more in the pipeline right now by way of portfolio and some single assets. Folks, the party is not only started, it has begun, and we are seeing these projects come to market, and we are closing on them as fast as possible. And we can't do them all. So the time is now. If you are waiting for something else, then there's the sign. It's not just me saying it. Oh, there's the sign. There's the proof. That now is the time, folks. I can't stress that anymore. And I don't want to spend a lot of time on this, but I've been at this for a while. I've been investing for a while. I've been teaching people how to invest for a little while. And I've seen a whole lot of folks that didn't get into the business when they should have, and a whole lot of folks whose biggest regret, those that are in self-storage, is that, guess what? Yeah, they should have started sooner. And now is absolutely the time. So if any of you think it's not, then shut off the TV and stop reading the newspaper if you can find one, if you can actually hold on to one any longer. Because those folks they don't, when it bleeds, it leads, and they don't tell you about the success and how investors are making money and how they've made money in recessions in the past. You won't find that most places out there. So shut it off and tune into this. The time is now. The time is now. The market is changing. Major shifts in the market mean that we need to shift gears, and some of you need to shift into gear now. Now is the time. I'm giving you permission. I'm giving you a command because recession number 3 is the great opportunity. We had the great recession. Now we see the great opportunity. Businesses and individuals will downsize just as they do in every single recession. History repeats itself over and over again. This is a commodity. It flourishes during a recession. People will downsize. Businesses will downsize. The rush to storage. Owners and partners will be stretched. You'll see partnership divorces in self-storage, which means that you will be able to swoop in and to be their savior. Those who didn't, the mom and pops who didn't do a good job building value in their facilities, well, they're going to have to sell it at refi instead of being able to refi. It's just not going to work. There's also a number of development projects out there, conversion projects, where their capital got really expensive. The delays and the increased cost killed the project for them. But somebody coming in with new, fresh capital, buying on a discount, is going to be very pleasantly surprised with what the market, the gift that the market is giving us right now. And again, as I said before, this for us personally, we've been waiting for this, and this is going to be the greatest land grab of our lifetime, and it is now upon us. Fed chair Powell says he's going to raise rates until inflation causes the economy to slow, and we all know that any of these moves has long and variable legs, and so we'll see this occurring for a little while, and that'll mean trouble for those that are looking to refi. I think the latest figure I saw was $450 billion of troubled commercial real estate coming to the market this year, and I think that number is going to rise, and that means nothing but an opportunity for us. Folks, this is the recession-resistant opportunity. It's COVID-resistant as well. We saw that firsthand in 2020. It seems weird now, 2023. How about that? At that time, when the world shut down, self-storage didn't because it was a necessary part of our economy. And so self-storage stayed open. It was not locked down. And as people had to create room in their homes to not only do business, but also to do school, and so folks whose businesses suffered had to put their excess inventory and perhaps sometimes office equipment into self-storage while they subleased or just shut down or lost their building. Self-storage occupancies went absolutely through the roof. And then, of course, as you guessed it, as demand goes, so does the price. And so the pricing of our self-storage rental rates went through the roof as well. So we leased up. We rented up, we increased rates, street rates, our existing rates, and then we began developing as much as we could possibly get our hands on as well. So if you don't, if you think that it's just me, that I'm just partial to this, you can't look up recession and self-storage anywhere on the internet without finding nothing but positive news about how well self-storage does during a recession. Even the multifamily folks, the multi-housing can't deny or ignore the fact that people are rushing out of multifamily because it's tanking, as it always does during a recession, as well as retail, as well as assisted living and mobile home parks. I'm in favor of self-storage because this asset class does. It always has and always will. Well, I shouldn't say always will. We don't know that. But it always has and currently is outperforming all other asset classes, as it did through the pandemic and as it's doing right now in the beginning of the recession. I wrote an article pointing to a whole bunch of other stats and reasons why, and just showing how it is currently. If you care to read that, it's a pretty good read. And it's not because I wrote it, it's because of all the stats that I found. I'm a geek when it comes to stats because I make decisions based upon statistics, not depending upon emotion or just luck or throwing darts. We're in this business for a reason, and we're deploying our capital for a reason right now as fast as possible in self-storage because the stats don't lie. So go look them up. What is the industry saying instead of just myself? Well, if you follow Inc. magazine, they said the number one industry to start a business in right now during this recession is self-storage. So go figure. Bloomberg says the best U.S. real estate investment, self-storage. Pretty credible sources. Pandemic proof? Yep. Wall Street Journal shows all the stats on how we came out of out of the pandemic and how self-storage was the highest flying asset class. And just more. I mean, all you need to do is take a look around, see how it's pandemic resistant, recession resistant, and it just outperforms all other asset classes as it has. But let's look back, not just through the recession and through COVID. How about the past 25 years, multiple recessions? So the National REIT, or the NAREIT, that covers the real estate investment trusts, all the asset classes in commercial real estate, 25 year average annual returns. Well, self-storage comes out on top. So there you have it. Industrial, 13.4% in second place. Healthcare, 13.4%. Multifamily at 12.9%. Retail at 12%. Office at 12.15%. And the S&P 500 at 7%. If you look back now at the downside protection, for those of you that are still fearful, from 2007 to 2009, self-storage was only impacted negatively at times by 3.86%. And the multifamily valuations obviously tanked during that time, as they're starting to do now, down 6.72%. And if they tanked, then retail was submerged at 12.32%. Office really struggled during that time as well at 8%. And of course, the S&P 500, well, the big old, casino on Wall Street for those that were stuck in the S&P 500 they went down, they went for the ride down to the bottom at 21%. So by the way, folks, S&P 500 only averages 7%, and that's if you pick the right stocks over 25 years. And for those that stuck in around, didn't do so well. But however, those that put $100,000 in a self-storage REIT in 1994, it outperformed multifamily alone. It outperformed multifamily by $2,215,650 and the S&P 500 by $3,494,170. So the actual returns was even higher than that. It outperformed the next two by that amount. So folks, this is the reason why. Why now? Sector has been recession resistant because demand for self-storage is based on life events. And we are heading into a tumultuous time in which life events are going to drive the demand for self-storage. Is starting to do, and as it always has. Businesses and individuals will downsize, and their extra stuff goes to storage. Private lenders are pulling hundreds of millions of dollars from Wall Street. It's sitting on the sidelines right now, and the smart investors are putting it into self-storage. And so sellers are grabbing their cash by selling their properties right now, and in some cases, they're forced to. Some of them are scared, and they're selling right now because they don't want to go through this downturn again, and others are just forced to. And again, storage is essential and consistently outpaces all other asset classes. So folks, those are the reasons why now. And the solution, if you're wondering, well, how do I get started? Well, it's to learn the business so you don't miss the perfect storm. Plain and simple. How to spot an opportunity and a deal from an opportunity, and determine by way of stats and your underwriting and projections as to how you're going to plot the dots to profitability. That's what we teach, and that's what we show folks how to do. So join us April 24th, 26th, and 27th for our virtual academy. So we're doing this 3 days live. It is online, and this is not a recording. This is not just your webinar. This is our team live streaming our 3-day event. We're going through the exact same sessions, the events that we go through as if we were doing it live in a conference setting, in a hotel setting. We're going to be doing this online, brought to you by my team, the same team that shows up at our live events, doing the same case studies, the same underwriting. Nothing is missed. Soup to nuts. We're going to show you, as we've done with so many dozens of folks in the past, to help. We've helped to create millionaires out of, and the hundreds of people that we've helped to get into the business, and folks that we don't even know that have gotten into the business. We'll show you how the best in the business does it. And we teach people how to go out and achieve their goals, their dreams, their bucket list. Dr. Dawn, again, one of our a former doctor, actually still practicing doctor, how to get into self-storage. 450 unit facility that she and I partnered on, bought together in Lyles, Tennessee. Bought it for $1.4 million with low rents and room to expand. We sold it for a profit of $1.165 million. That's the profit. That's the net by just doing the basic best business practices and adding onto that facility and raising rates. And then 2 years later, doing everything that we do in our treasure trove of practices to be able to create that profit, to then take Dr. Dawn paid off her the rest of her debt in her medical practice and school debt. And we took that $865,000 after that and did a 1031 exchange into the next property. That was a recently renovated conversion project that we then sold as well, and going into another project and just doubling down again. Bev Kruger, one of our students, came to our academy, purchased this site, the facility, and the ability to expand for $842,000, improve the operations, leased it up, expanded it, then leased it up again, and sold it for $3.4 million. So you do the math on that one, then rolling at $2 million over into her next project. This is a quick flip that I bought with my partner, Sandy, out of Canada. Went down to the Rossville, Georgia market, just outside of Chattanooga. Bought this facility without expanding, doing anything else other than cleaning up that sign and cleaning up the property, raising rates, curing the accounts receivable, and sold it for a quick $389,000 profit. We develop as well, and we develop with our students who sometimes, well, I don't want to say they stumble across, but find some incredible development projects. And their first project can be a doozy, as this one was, and a doozy in a good way. So our partners, Doug and Monica, found this site to develop on. They clearly didn't have the experience that a lender would allow them to do this project on their own. So we created a partnership. We brought our general contractors to the party, and we showed Doug and Monica how to do the rest. And we came alongside of them, built this absolutely beautiful Class A facility, multi-level, 2 buildings. It's the only facility in the world, our architect says, that has been built on this way, with 2 buildings that were connected by a hall and on a very difficult piece of land. Built it for $8.9 million, sold it for $18 million for a $9,100,000 profit shortly after lease up. So we barely held this thing very long after it was developed, and then turned around and sold it for $9 million. So, folks, there's game changers and there's life changers. And so, depending upon where you're at and what $9 million does for you, it could be a game changer, it could be a life changer. I retired those folks, and it was a game changer for us. I'll tell you that. So, how do we teach, and how do we show you and how folks to do this? Well, we do it hands-on, not theory. And there are a lot of folks out there. I shouldn't say a lot. There's a few folks teaching self-storage out there. There's a lot of folks that are talking about it online. How's that? And many of them have, they got a facility or 2 under their belt, and they were successful because the market has, been the wind in their back. But we teach hands-on from experience, because we've been buying or developing, creating value, and then exiting and showing that value. And we've been doing it, for 30 years in real estate and for almost 20 in self-storage. And we've seen and witnessed just about everything in self-storage. And that also has allowed us, again, to see a little further down the road than others, and to be able to teach people how to approach this business the way that we have as well, by learning about the business, by going online, pulling down our free resources, attending a webinar like this to get a sense and a flavor for it, but then attending our academy, going through our 3-day training, getting across the finish line in a facility with our help. As Kurt mentioned, we do help and assist people at all steps of the way and all parts of the process, and a mentoring program that fits any and all needs and experience levels, as well as additional tools and resources by way of software, consulting, you name it. Soup to nuts. We are the nation's largest educational organization that teaches and has taught more people how to get into self-storage than anybody else, with a full suite and package of resources to be able to allow you to do so. And with our community, what we've been building over the years is not only a community of folks that are doing it the right way, that have been better prepared, but now we all get in the same room in our mastermind and we're doing business and business life together. And it's an incredible community of A players that is going out there, finding these facilities, and we're all doing business together. Most of these deals, which nobody's ever seen, they're off-market deals that we're sourcing and that we're doing with each other using our lending relationships and our private equity. All, I would say, underground. It's not really underground, but it's underground because, we don't talk about it. You won't see it. We don't tout it. It just shows up in our slides that shows who and where our partners are and what we've done over the years. And so we'd love to have you be a part of that group, but it starts here. It starts with our academy. 24th, 26th, and 27th. Yes, it is an active QR code, believe it or not. Go ahead and click on that to sign up. You're going to get 2 tickets to the 3-day virtual self-storage academy. So you and a partner, if that is somebody that is across town, across the country, can attend the academy for the low price of $497. So this is the welcome to the party promo. Normally $997 for 2 tickets to come to our virtual academy. $497 gets you 2 tickets to attend for all 3 days. It gives you full access to everything that we have to offer. And so you need to go now to academy2023.com. For those of you that are old school, like myself, you can put the www in front of it, academy2023.com. Click on the QR code, reserve your spot, and come spend 3 days with us, and we'll show you exactly how we do it. Learn from the best in the business that have been teaching more people than anybody else how to get across the finish line, and join our community of folks that are taking advantage of the market right now, because the market is hot. And the reasons to take action right now are, one, that we have the capital. We need deals and partners who do it our way, that we teach how to do it our way. We don't partner, we don't give money away. So I'm not Santa Claus, and our organization isn't a charity that if you find a deal that you just call us up and the money is magically wired into your account, or by osmosis you're successful. We do partner with our students. A number of them, 80% of our projects are done with our call it former students that are practitioners in the industry, that are going out and they've been transacting for weeks, months, years, decades, and then they come back to us because they get too many deals or too big of a deal to invest with us. And so we've got the capital. We just want to do more deals. Storage is red hot. It's going to heat up as we capitalize on the recession. As the recession heads into full swing, we're going to capitalize on that, as we know. So join us at the academy and learn how to work with us. That's the reason to join us now, and why it's time for action is because we see so many would-be successful entrepreneurs who never become successful because they never take a step up to the plate. And it's usually out of fear, because they don't know what they don't know. It's that fear of failure. And really what comes behind it at the end of the day is that fear that, what people are going to say about them if they don't succeed. So just let's mitigate that risk by just learning the business, so you understand the difference between a deal and an opportunity, and then how to create your capital stack, how to structure a deal to get across the finish line using our Rolodex and our team to be able to assist in making that happen. 23-year-old Casey Cavell was able to go out and do this and buy several facilities, exit those, grow the value, exit, get into his passion, which is a baseball industry by way of some franchises, and not a baseball actual franchise, but a franchise in the baseball industry, to sell those out and then to come back to self-storage. Casey has been a part of our team for a while, and now he teaches people how he's done it as well. And so that's what we do, folks, is we teach people how to go out and create a recession-proof cash flow in real estate without all of the hassles of tenants and toilets and trash. And so, gang, the best way of going about doing this is, if I could, I will go back there we go. That is the best way to get started working with us. And folks, I just like to say in closing, and before we take questions, I have a question for you before we take questions, which is, are you ready to take advantage of the opportunity that exists in self-storage right now? Because, we've, it's possible, like you and so many other real estate investors, or employees that I've spoken to, they fought and struggled for so long to make your fortune in your current job or in your current business or what you're doing. Or in the tenant and toilet business, that you don't know how to do anything else. You've just been kind of stuck for so long, either, plateaued at a level and you may be doing well, but you always anticipated doing more or better. Well, folks, let's be candid here. There's a reason why you're here today, and it's not by random chance. I would say you have a goal of buying your next or your first piece of real estate, or quitting your job, or taking your investments portfolio to the next level. to become perhaps maybe a multimillionaire if that's what you're looking for, so that you can go out and do greater things for yourself or your family or others. And that's okay. I put myself squarely in that last category. That's the reason why we do this. Is our success is to be able to create miracles for other people, and to be able to end generational poverty one family at a time, and to be able to raise our kids and to take them to Washington, D.C. instead of them learning about it at school. And that is what self-storage has provided for us. So I don't believe that we're all here by coincidence, and that the dreams and goals that we each have in our head were placed there for a reason. I 100% believe that. And depending upon what you believe, perhaps by a higher power, that's truly where mine comes from. I know that, and I recognize that. And I, for one, don't believe that, at a young age, a world famous author or astronaut or Olympic athlete gets an idea in their head that they're going to go on and, achieve the goal of, and once they do that, they, when they get to heaven someday, or wherever you believe we go, once we leave this earth, only to be laughed at by the people that are there. I think the thoughts that we all collectively share is to be successful in real estate, or whatever that venture is, looking at self-storage as a business, to live out those dreams that each of us possesses in our minds, that was placed there purposefully. And where there's a will, there's a way. And that's why I'm here, right now. And that's because I'm supposed to be, and you're supposed to be as well. I'm here to show you how to become a real estate and small business millionaire, to achieve those dreams and the goals that were placed in your head and that were placed there for a reason. So you go out and do what it is that you wanted to do. That idea that was placed in your head and has been in your head for a little while, that perhaps hasn't been done. But how to create wealth, and grow that wealth the safe way, which is in this recession-resistant and inflation-resistant asset class, this beautiful asset class that we call self-storage. It's by buying these value-add Class C, these ugly ducklings, installing the self-service kiosks, running them with the interactive tech and the websites, and then filling them up, adding additional buildings, and growing your wealth, and creating more value, and then selling it off to somebody else along the way, that'll allow you to achieve the dreams that you've always had. And quite honestly, changing your life and the lives of your entire family tree, if we could be honest with ourselves. So now's the time to act on the reason why you're here. Come spend 3 days with my team, and we'll show you how to do things that other people dreams of doing that they can't afford to do. We're going to make that happen for you and make that a reality. We've been doing this for years, and we do it better than anybody else. I know that, hands down. Our team is the best at what they do, and our team is full of nothing but successful self-storage investors, following the best business practices in the industry at a time which has been no better than to get into the industry right now. So, folks, stop listening to the naysayers and the negative noise out there, and come spend 3 days with us. We would love to turn your dreams into a reality.